everyone, and welcome to the Love America Hate Taxes podcast. I'm Ryan, and this is Don. And Don, what if I told you? Well, let me back up. I know you've heard spend 15 minutes and save 15% on your car insurance, right?
Yeah,
Who says
there
that?
was a commercial, some little lizard.
Yeah, some little green lizard, right? Well, so in the tax world, what if I told you that 20 minutes of your time could also save you 20% or more on your tax liability?
Well, if you are utilizing a tax planner, I
Hmm.
would say that's probably pretty realistic. Now, and again, that could be through strategic tax planning, which we talk about here on the program.
Hmm.
It could be through doing tax credits like research and development tax credits, which we do talk about on this program as well. And the key here is um, there's 70,000 pages in the IRS code. And the whole idea of being able for any CPA, and I want to come to the defense here of knowing what they can legally do
Hmm.
is not something they have the time to get into. So we throw out some real simple ones. So
Yeah.
putting your kids on payroll. A lot of people don't think about this here, but there's opportunities in a valid business of putting your kids on payroll or using your home as a home rental under the
Hmm.
Augusta rule. Just those are what I call basic simple ones. But then there's more advanced strategies that can even save more on your taxes, and all based upon the code. You don't want to get into that fringe area, that gray area. You want to stay within the code. So,
Yeah, now you mentioned something. You said research and development credit. We work with a lot with research and development
yes, we
credits,
do. Thousands.
and there's one really important thing. There's a deadline coming up for that, and I think we're about 39 days away from that. You want to walk them through the deadline really quick, just kind of what we're looking at?
Yeah, so as we know, it generally takes about 3 to 4 weeks to get all documentation in, get the study completed. So if we backdate this here and look at, okay, July 6th is the deadline that has to be filed with the IRS, Ryan.
Hmm.
But we know that CPAs out there who have to file these here are going to generally need a week or two, and they got the holidays in there for the 4th of July and such. So we have put, all intents and purposes, June 15th or somewhere in that vicinity is going to be the deadline for us to be able to get everything out to their CPAs. So if we back that up 30 days,
Hmm.
May 16th is really going to be somewhere around that May 16th, May 17th is going to be the deadline for us to be able to get all your stuff in and get that study completed, because we don't want to get in a situation where you miss out, because once that July 6th comes and it's not filed with the IRS, you don't lose
Hmm.
the ability to do the retroactivity under the one big beautiful bill,
Hmm.
but you lose the ability to expense all your R&D in that respective year.
Which makes it a little bit more costly for you in the immediate.
It does, yes,
Yeah.
because you have to do some amortization, which makes this complicates things. That's the reason why a lot of people did not take R&D for those years of 22 through 24, is because they didn't want to have to go through the whole issue of
Yeah.
amortization.
So simple is smooth.
Simple, smooth, yeah.
Awesome. So one of the things too here is about the R&D is it's not just for tech companies. A lot of people think that it's just tech companies, but healthcare industry qualifies. Some food industries qualify. Dental laboratories, dentist offices, compounding pharmacies, groups like that, they also qualify. And so it's really to help really drive innovation here in the United States. And it's also a dollar for dollar credit as well. It helps to
Yeah.
offset dollar for dollar.
Yeah, because a lot of people get it confused as being a deduction. Now,
Mhm.
you do get a deduction for your expenses, but on top of that, so a lot of people will say, well, yes, I did R&D and I have my expenses. Let's say they're manufacturing something and they have an R&D department. But on top of that, there's a credit. A credit is there to incentivize you to improve upon processes and protocols.
Mhm.
But the credit is a dollar for dollar offset. So we use this illustration that I showed you earlier with the client who has $40,000 from his study. So that pretty much offsets $40,000 of tax liability. And because we're doing retroactive and he's already filed his taxes, they're going to do amended returns and he's going to get a refund
Mm.
back, money in his pocket.
Mhm.
And that's the best way to get it.
Yeah, absolutely. And just to reiterate, the important part is he probably spent maybe 2 hours of his time doing that, maybe less than that,
Yeah.
doing that, and he got $40,000. And
Yep.
so you can't find an ROI like that anywhere as
No.
far as that goes.
If you do, let me know what that is.
Yeah,
It's
exactly.
definitely not crypto right now. And
Yeah, and it's money he's already worked hard for, deserves, and so we're happy for that client that they got that, and that's just one of thousands of other examples that we could use for that. So,
and we talk to a lot of physicians and dentists and chiropractors who say, well, I don't do anything. I don't do anything academic or anything like that. The key is what you're doing Monday through Friday, because
mhm,
what the IRS is doing is they're incentivizing you to improve upon patient outcomes if you're working with patients or a product or a process. I was talking to someone who's referred to me by a CPA earlier this week, and he has done something amazing. He's taken a product that was manufactured by a very large company that I'm familiar with, and they did away with it. So what he did is he brought it in and he improved it,
Hmm.
and now he's selling it back to the company who used to manufacture it.
That's amazing.
And that there he's gonna get R&D for it.
Wow, that's
So,
amazing.
yeah.
Well, that's really good. So just remember, guys, we only have 39 days left
Yeah.
to go take this credit retroactively where it's simple and right. So smooth, simple is smooth, and that's what we want to really strive for. 39 days left to do this. You can go 3 years back and get credits from all the way back from 2020, depending on when you filed. And this is money that you've already worked hard for. So we want to make sure that you get that. So make sure you reach out to us. If you like this content, make sure you subscribe to the link below, and also schedule a call with one of our tax specialists so that we can see what you actually qualify for and if you qualify for this credit.
Yeah, May 16th, don't forget.
May
I'll
16th.
make sure you don't miss out on that opportunity.
Awesome. Anything else, Don?
No, just one last thing I'll say that because wages are a big factor in R&D, do we want to chat a little bit about that as
Yeah.
far as why it's important to understand that not every business qualifies. And maybe you're doing the activities, but there's just not enough wages. So we generally look at least $300,000 of payroll. That's the owner and all his or her income, and then the employees that are involved in that process. So.
Yeah, absolutely. That's going to be important to how much credit that you can get back.
Correct.
So.
Yeah, the more wages you have, because for the most part, R&D is really based off most of that, unless you're in a manufacturing situation, is going to be wages. And so the more payroll that you have, the larger the credit generally you're going to receive.
Awesome. Anything else?
That's it.
Guys, thank you so much for this joining us for this Love America, Hate Taxes podcast. Again, click the subscribe button below and click and schedule a time to talk to one of our tax study specialists, and we'll be happy to see what type of money we can help qualify for you. Great. Thank you. Hey.